Fair value gap concept. A major trading trend, popular in trading now. It has specific reasons. Due to strong market results, not all gaps are equal. This fair value gap failed to perform well. But this gap worked well. What made it successful? Why did one gap fail? There's a unique method. I use a hidden technique to validate fair value gaps. Add this to your strategy. You'll see instant improvements. Your fair value gaps will gain much higher accuracy. Let's define a fair value gap clearly first. We see bullish and bearish fair value gaps often. Price moves sharply up or down, creating large candles. Here, price surged quickly, forming a big green candle. It moved too fast for sellers to react properly. Thus, sellers will likely target this area later. Spot a gap by checking candle shadows before and after. This zone is the actual fair value gap itself. Check your charts. These gaps appear quite often. Price often revisits this zone, fixes imbalance, then rises again. We can profit from this movement with proper strategy. But if you traded gaps, success isn't always guaranteed. That's because you may have traded an invalid gap. What makes a gap valid? 6 key factors determine this. 6 critical elements must be confirmed for gap legitimacy. First, the gap must be untouched to remain valid. This means the gap's core principle is price moving fast. Price shifts without giving the other side time to react. This zone must remain untested for the setup to work. For instance, after this gap formed on the chart, price dropped back to it quickly, then rose again. If price revisits this zone, it's no longer a valid gap. A valid gap must be untested and unmitigated initially. If tested, the gap becomes invalid. Avoid trading it. Now, on to the second condition for gap validation. Another way to confirm gap validity is checking candle reaction. We want the candle's response to close within gap boundaries, or it should close in line with the gap's direction. Here, the candle crossed the gap, but closed below it. This makes the gap invalid. We want a different outcome. Like this, where price closed inside the fair value gap. It's fine if a wick extends through the gap zone, but it must close within the gap for validity. If the candle body closes in or with gap direction, it's safe for trading entry. Now, the third requirement. To ensure a strong gap, use additional confirmation methods. One approach is using known support and resistance levels. Here, an untested bullish gap formed on the chart. Looking closely, a support level exists right in the gap. It aligns perfectly within the center of the gap zone. This alignment increases the chance the gap will perform well. The same applies to bearish gaps. Find aligned resistance. This strengthens your gap trades and boosts their reliability. Now, on to the fourth factor for validating fair value gaps. Some gaps are stronger and carry greater importance than others. A simple method is ranking gaps by their chart position. This chart shows multiple bullish fair value gaps present. The lowest gap holds the most strength and importance. The highest gap is weakest, with the least significance. Ideally, trade the lowest bullish gap available on the chart. For bearish gaps, the highest gap takes top priority. This approach improves your chances of picking a successful gap. It greatly enhances your odds of trading the right gap. Now, on to the fifth factor, closely tied to the fourth. Choose gaps with the highest priority for best results. Open Trading View. Select the GAN box tool shown here. Go to its settings. Ensure price levels include 0, 0.5, 1. This gives you an output looking like the following. With multiple gaps on a chart, use this tool to draw from the move's bottom to its top for gap selection. This helps decide which gaps are worth trading effectively. Avoid trading gaps in the tool's upper section for best results. Focus on gaps in the tool's lower section only. For shorts, mark from high to low using the tool. Trade gaps in the tool's upper section for bearish setups. Following this ensures you trade only high-priority fair value gaps. Now, the sixth and final factor for gap trading success. I'm sharing a valuable tip about my trading insights. I run a mailing list detailing my trades and reasoning. Sent every Wednesday and Friday, it offers great market insights. It includes trades like one with 27% gains last week. Best part? It's free to join with no obligation. You can unsubscribe anytime. Check the link in the description. Now, back to the sixth and final gap validation point. For gap trading, a structure break must precede gap formation. A structure break happens when price crosses a prior high or low. Here, a gap formed but didn't break the prior high. So, we skip trading this gap due to no structure break. For bullish gaps, price must exceed the previous peak. While doing so, it often forms a fair value gap. This gap is valid because it broke the prior high. For shorts, price must break below the prior low. Combine all 6 rules to create the strongest gap setup. This greatly increases the chance of price respecting the gap. Here's a real trade example using these 6 criteria. Price set this high, our reference for structure break. We wait for price to break this high, confirming structure. Then, we look for a fair value gap to form. We ensure the gap is untouched and untested so far. We mark high and low priority gaps for targeting. This helps us choose the best gaps to trade. Using the GAN box, draw from bottom to top again. This gap formed in the tool's upper section, so skip it. We ignore it and focus on gaps in the lower section. This leaves us with this valid gap to trade. Notice a support level also aligns within this gap zone. This gap meets all criteria, making it highly promising. We expect price to drop to this zone for trading. Once there, we check if candle closes in or above zone. Here, price did exactly that, showing respect for the gap. All 6 criteria met, confirming a strong, valid gap setup. Set profit target at moves high, stop loss below gap. As expected, price surged after hitting the fair value gap. This led to a highly profitable trade outcome. Combine these 6 steps for consistently better gap trading results. Hope you learned valuable insights from this trading video. See you in the next video. Take care.